Welcome back to Explain the Charts, where we break down the market's narrative, combining current events with technical analysis to help you make informed trading decisions. Today, October 15th, 2024, we're focusing on the USDJPY, a currency pair that has been making headlines recently due to several factors. First, let's take a look at the news and recent events influencing the USDJPY. Recent headlines suggest that the Japanese yen is strengthening against the US dollar, partly due to expectations that the Bank of Japan may shift away from its ultra-loose monetary policy stance. Analysts are predicting that the BOJ might end its negative interest rate policy by raising the key rate to 0% in 2024, which could bolster the yen. However, the market remains uncertain about the BOJ's rate hike plans, and any concrete decision regarding the policy shift could significantly impact the USDJPY. Adding to the volatility, recent U.S. economic data suggesting a less aggressive rate cut cycle has also impacted the USDJPY. Expectations for a less aggressive policy easing by the Federal Reserve and rising bets for a regular 25 basis points rate cut in November have kept U.S. Treasury bond yields elevated, providing some support for the U.S. dollar. The USDJPY is a dynamic pair, and the current market sentiment suggests that it may continue to fluctuate based on news and decisions from both the Fed and the BOJ. Now, let's move on to the chart data and see what insights we can glean from the technical picture. Zooming in on the daily chart, we can observe that USDJPY has been trending upwards in recent weeks, breaking above key resistance levels and hitting a new 2-month peak. Looking at the recent bullish momentum, we can identify a clear uptrend, suggesting that buyers are in control and the price may continue to move higher. However, it's important to note that the USDJPY is currently trading within the Ichimoku cloud, which can sometimes act as a barrier to further upside movement. Therefore, while the technical picture suggests potential for further gains, it's essential to be cautious and look for confirmation of continued bullish momentum before entering a trade. The RSI indicator, while bullish, has failed to clear the latest 3 peaks, hinting that the uptrend could be overextended. This suggests that a potential correction may be on the horizon, and it's prudent to be prepared for a potential reversal in price direction. Traders should closely monitor the RSI for any signs of divergence, which could indicate a weakening of the bullish momentum. Let's take a look at the 1-hour chart, narrowing down the time frame to get a more detailed picture of the recent price action. Here, we can observe that the USDJPY has been consolidating in a range over the past few hours, creating a series of inside bars. The range suggests indecision in the market, with buyers and sellers locked in a tug-of-war. This indecision could lead to a breakout in either direction, but it's crucial to wait for a clear signal before taking a position. We can also see a divergence between the price action and the RSI indicator on the 1-hour chart. The price has been making higher highs, while the RSI has been making lower highs, suggesting a potential bearish divergence. This divergence could be an early warning sign of a potential reversal, prompting traders to exercise caution. Let's shift our focus to the 15-minute chart, analyzing the most recent price fluctuations. Here, we can see a series of small candlesticks, suggesting choppy and indecisive price movement. This choppy price action reflects the uncertainty in the market, and it's difficult to discern a clear trend on this time frame. However, it's worth noting that the price has been forming higher lows, hinting at a potential bullish bias. Looking at the recent price action on the 15-minute chart, we can identify several key price levels to watch out for. The immediate support level is around 148.70, while the resistance level is located at 149.00. If the price breaks above the 149.00 resistance level, it could signal a continuation of the upward trend. On the other hand, if the price drops below the 148.70 support level, it could signal a shift to a bearish trend. To summarize, we've seen a combination of bullish and bearish signals from the chart data. On the daily chart, we observed an uptrend, but with potential signs of overextension, suggesting a possible correction. The 1-hour chart displayed a consolidation range and a potential bearish divergence, while the 15-minute chart exhibited choppy price action with a hint of bullish bias. The news and recent events surrounding the USDJPY have added to the volatility, with potential policy shifts from both the BOJ and the Fed influencing the market's direction. With the current market sentiment and technical picture, it's crucial to exercise caution and look for clear signals before entering a trade. It's essential to monitor the price action, key levels, and indicators for any signs of confirmation or divergence. Key price levels to watch out for in the short term include the 148.70 support level and the 149.00 resistance level. A break above 149.00 could signal a continuation of the upward trend, while a drop below 148.70 could indicate a shift to a bearish trend. In the longer term, the USDJPY is likely to continue to be driven by the BOJ's monetary policy decision and the Fed's rate cut cycle. Any concrete news regarding the BOJ's rate hike plans or a significant change in the Fed's stance could have a significant impact on the USDJPY. Therefore, it's essential to stay informed about the latest developments and news from both central banks. It's important to remember that this is just an analysis based on current market conditions and may not necessarily predict future price movements. The market is constantly evolving, and it's crucial to remain flexible and adapt your trading strategy accordingly.